Hello my fellow traders, welcome back to this channel. Yeah, it's another brand new video from me here. So I'll be shooting videos now from time to time. So if you're a returning subscriber, I want to say a big shout out to you. Welcome back to this channel, and happy Sunday. In fact, today is even happy Father's Day. So if you're a father if you're a father and you're watching this video irrespective of time or wherever you are, I want to say happy Father's Day to you, and also happy Sunday. I'm hoping that you went to church. Yeah, so because that's an important thing now. So diving back into this video, okay, my previous videos have been a retail trader. I've been showing you top down analysis, I've been breaking down charts, I've been coming on live. My intention of coming live is not to show you to prove I'm the best trader. Obviously not, I'm not the best trader. We all learn every day. So I'm just trying to show you that I'm not trying to teach you something that doesn't work. It works for me, that's why I put it out here. I won't give out what doesn't work for me. I won't just see something somewhere and I'll just come to life here and let you know about it when I have no idea about it. Obviously not, I won't do that. So I will test it, and if it's working for me, I will come here to share it with you guys. So if you could check my previous videos, I've been showing you trades, top down analysis and all of that. So right now I have gone a bit step ahead, to be also an institutional trading. What's a retail trading and institutional traders? They are quite different. You understand? Now let me just explain. Retail trading are traders that trade, okay, let me just use it in a layman same logarithm that you guys will understand. So retail trading are those traders that deals with trend line, they deal with support and resistance, they deal with different concepts. Yeah, now retail traders looks at candlesticks pattern, while institutional traders look at supply and demand. They look at market structure. So actually retail traders also do the same, but they're actually different. Now I trade both of them. Most cases, once I come in my live chat, I'll see opportunities to trade as a retail trader, while most times I'll see opportunity to trade as institutional trader, irrespective of the type, except I am exhausted. So now my next video I'll be talking about psychology in forex. Man, this is the key. I won't say it's the killer tribe, but it's very vital in trading. There are different concepts that you have to come up with to help you and guide you towards your trading. Even for you not to trade is also a trading skill. For you not to trade is also a trading. For you to wait and be patient is also a trading skill. There are different concepts, psychology you have to put in place. You have to be calm. There are different people that love trading in the morning. Once they are all towards themselves, they trade. Some towards the night when they are less busy. Many, you have to figure out your time, and I'll be talking about psychology in my next video. So if you don't want to miss it, you know what to do. Smash that subscribe button, and please comment forex, type forex in the comment section below. It will help YouTube algorithm suggest this video to many other people. This is only how you're going to encourage me, because nobody's paying me for this. The channel isn't ripe yet for monetization. So I'm just help me comment forex in the comment section below, so this video can go to other people. My intention of growing this channel is because when I was starting out, I struggled a lot. Yeah, I struggled a lot in forex, in trading and all of that. So I have come up with this channel so to help people that are starting out. Even if you have been trading, there is no knowledge is a waste, to add to your trading skill. And if you are starting out, to help you shorten your journey to high profitability and consistency. So that is just the intention of this channel. So help me, let's grow this channel together. So that's by the way. So what I was saying about institutional and retail trading is that now I am trading both sides. So there's sometimes I will see that the market want to manipulate the retail traders to stop them out. I'm going to be showing you live example here in this particular jump 10 index. We are going to be breaking this chart down to the depth. Yeah, I'm going to show you how an institutional trader will trade and how a retail trader will trade, and comparing both sides. Yeah, so let's dive straight into this video. So this is jump 10 index. This is weekly time frame. Now this is what I thought in my top down analysis, and where as a retail trader, figure out the top the where the market is heading to. That's the keynote. Yeah, if you don't know where this market is heading to, you are already 90% gonna lose that trade. You can take it from me. If you can't figure out where the market is going to, keep your strategy aside. Keep your markets, keep your strategy aside, your candlesticks pattern, your double top, double bottom, inverted head and shoulder, all of that. Keep it aside. That is not necessary from this point. This point, you have to first figure out where this market is going to. Hey, where are you actually going to? If you can know where I am going to, if I am going to either Mr. A house or Mr. C, then you can apply a strategy that you use to what predict and follow me to go to that particular place. You can't from my house and apply strategy to, are you a prophet? Come on. You can't from my house and apply strategy to predict that I'm going to Mr. C, why I'm going to Mr. A. That is just gambling. But if you can predict where this market, you know that Mr. C house is towards the south and Mr. A is towards the north. So once you see me facing towards that place and going towards that direction, then you will then apply strategy towards follow me in that direction. That is it. Your strategy doesn't move the market. That is one thing you have to put at the back of your mind. Your strategy don't move the market. It only helps you to follow the trend. So now I know where the market is going to. Now this is what I thought. You can see the market is in a downtrend, obviously, upper higher highs and higher low. Okay, let's do this now. So in market, higher highs and higher lows and all of that. If I should draw my Fibonacci from here, swing low to swing high, you'll find out that here is the word 61.8 and the market retraces back. So but that is by the way. So now this is weekly time frame, and let's go to daily. So I want to break this chart for you. So now this is what retail traders do, and I'll tell you for sure this is what I did. This candles you are seeing here, let me show you. You see these candles you are seeing here, I've entered this trade. I hold this market from here all the way to the top to this point, and I opt out. I'll tell you why I left the market and all of that. So first of all, you can see that the market came to this point. Now what is support as a retail trader? Support is anywhere the market gets to and will fail to go more deeper and then turns around at that point. That is what is called support. Now this is support. The market was in an up downtrend, coming down. You can see this sliding down, then gets to this point, then what starts going back. Now that point acts as support that we are hoping in the nearest future, once the market gets to that point, it will not just blow out. It will have to do something, a kind of reaction at that point. And you see the market gets to that same point and what hold the market and start retracing back. Now that alone, once this market was coming down, I was just waiting that once the market gets to that point, I'm going to join this trade. And that is number one confirmation as a retail trader. And number two, you want to look out for once a particular support is going to hold, is that you won't see the market coming down this way. Let me show you. Yes, you won't see the market coming down this way. You see this candles, you will not see the market coming. Once you see the market coming in this full force, that support is likely not gonna hold. It's going to break and retest. But once you see the market doing this kind of move, you can see this shaky move. I call it shaky move, this like consolidation to the downside. That point is likely gonna hold, as you can see it here also. As you can see it here also, you see the movement of kind of not sure where the market is going to. Now on that reset, it's going to blow off. So this market might also come back to do a second touch at here before giving a long bullish candles. Yeah, so but that is by the way, I've already gotten what I want to get, but I'm going to follow this trend. If it's going to go bullish, I'm going to make a lot of money here by God's grace. So that's number one. Now we have figured out the market came to that point and the bad place holds it. So now that's by the way. So that is what I did as a retail trader. Now so this is now what I do as an institutional trader. I come here now. This is what anyone will do. Yeah, this is what anyone will do. They'll pull out their trend line. Okay, first of all, I said you have to determine where this market is going to. So let's pretend that I wish this is trading view. I would have do a back test. I would have cut it from here. So but let's pretend that all these big move haven't happened yet. This move haven't happened yet. So this is what retail traders do. Retail traders is gonna pull out their trend line. This is a downtrend, as I said, obviously, and they'll pull out their trend line this way. And the third touch always does the trick. So you can see the first touch, second touch, and the third touch. You can see it here moving downward. You understand, to continue the trend. And if you pull out your Fibonacci from here, okay, let me do this practical. You're going to see that place is going to hold either 50 or 61. So let's see. Okay, let's see. Very good. So let's drag the top. Okay, sorry. Okay, good. Now you can see that's the point of what? That's the point of 50 retracement, 50 point retracement. You can see it about here. So now you can see, and that is where, that is the support. You can see, and I taught you that once the support is broken, it tends to act as resistance. You can see it there. And now we see, I want to tell you something. The more confluences you have in a trade, the more validity that trade is. Now, number one, the top down analysis is what is going downward from daily time frame. We come to 4 hours following that same trend. Now, what do we do when we want to come to 4 hour time frame? We are trying to find a particular time frame that is saying opposite what the higher time frames are saying. If the daily, weekly and all of that are saying downward, keep going down till you, even the market till 1 minute is saying downward, wait. There is a part for the market to do a retracement to say otherwise, where what the higher time frames are doing. Why did I say you should wait? Because that's just the pair of a retracement. You should know that the market don't move in straight line, it goes in wave. So once you wait, once you wait and the market is doing the opposite, definitely it's going to turn back to follow align with what the higher time frame is doing. That's the only way, that's the place now you now apply strategy to follow the trade. Yeah, so you can see the market has been doing a downtrend. It has been playing down, you know, all this plays, sorry, down from here. You just have to be patient. Now you see something like this, the market is giving some kind of bullish candles. You now say, yeah, so once this, maybe the 1 2 3 has happened, what you now do now, okay, this point is doing otherwise of what others are doing, so definitely this market will get to somewhere and will start turning back down. So that plan is what I want to determine now. So number one, you draw your trend line. Of course, the number one is the top down analysis is downward. The second is draw your trend line. First you get the first story, second thought, then you extend it to the future. Now you can see we extended it to the future. Now we'll be hoping at this point is going to hold. That is if this haven't happened. The second one, support and resistance. You can see where tends to act as support. Once it's broken, it tends to act as resistance. So we extend it and it's meeting at that same trend line point. The third one I'm using here now is what is called Fibonacci. Swing high to swing low for a downtrend, and you can see 50 and 61 are the important points. 61 is the golden rule, 50 is the most point that holds the market. Now you can see 50 is also aligning at that same point. Now this is a good confluence. If you are using moving average, you're going to see that point is where it's going to turn. So the more confluence you have, the more validity that trade is. So many people took this trade. Yeah, many people took this trade. I didn't take it. I won't come here and lie or tell you what I didn't do. Yeah, so many people took this wonderful trade and they were in good profit, you know, swinging down. But now let me come as a retail trader to tell you what really happened. But this is where I took the market from. I took the market from here, this point, to the upside. I took the market from here and I swing it. Where did I really opt out? Okay, I guess it's somewhere here. Yeah, somewhere around here, but my lot size were good. We're pretty nice here. I risk management and all of that. So I want to tell you something as a retail trader now. Why did I actually take that trade? So let me tell you. Because of daily time frame. Don't forget, this is a support. This is a major support and a shocking movement. So I know something is going to happen. So I just took that good move to the upside. So before this second retrace and boom, to the upside again. So I took this trade. No, okay, this is the first trade I took and all of that. So you can see the third touch always does. You can see the validity and the market respected it, and this is 4 hour time frame. This is good. This is good 12 hours trade straight down to the downside. So that's a good profit now. So now let's go to institutional trading. What institutional traders will do. Now you can see people that are holding that market for the market to break the previous low. People that are holding the market for you to break here. You can see the market came back and stopped them out. Why did this market stop them out? Now this is how institutional traders trade. Now what they do is now they look at, okay, what is the structure of the market? The market is in doing a downtrend. What is the law of downtrend? Downtrend always do what? Lower lows and lower high, lower lows and lower high. That is the structure. So lower low, lower high, lower low. Okay, came to do a double bottom, is still valid as long as it didn't break the previous high, still in a downtrend. So we did another lower low. So once the lower low is happening, we're supposed to come back to test the other block. I used to call it the place that gave it audacity to break this market structure. That's what we call it, continuum of structure, sorry. So the point that gave it audacity, and that's where we have other block here. So we have a lower low. Okay, as you can see, this lower low, lower high. Now this market breaks this point. You can see it break the market structure of here. So now the market came back to test the other block. I can see the other block around here, and the market was swing down all the way down. So now as the market was swinging down, the market also breaks structure here. So now where did the market, where is the other block line? You can see the other block. We have another block here, we have another block here. So you can see the market broke structure and starts finding his way back up, and you can see the market came back to test the other block, Now where is other block? Other block is the last opposite candle of a market. If the market is in a bearish move, so the other block will be the last bullish candle. Market is in a bullish move, the last bearish candle, that is the other block. So you can see the other block around here, and the market came pretty nicely and tested it and is failing. But don't forget that we have met a high support level. So this market respected the other block really nicely, but this market is still in a downtrend as long as this market haven't broken this high. So we all downtrend movement always have lower lows and lower high, but once the market now breaks the previous high, we are now considered it an uptrend. So this is the previous high. As you can see, lower low, lower high, lower low, tested of it, lower high. So this is the last high we have before making this move. So if this market rally up and breaks this high right here, so what are we going to be looking for? We are looking for the market to retrace back to the other block that gave it the audacity to break that high, to push back up, because you have broken the market structure. So what we'll be having now is higher highs and higher lows. So that's the concept about it. So now this other block, I missed this trade, but if I'm actually active, I would have taken this trade from here, because this is the other block of this break of market structure, retest, when go down. So the market did the shaking move back to the other block, and you see it failing back down. The market may fail to break market structure, but I'm not really sure of this market because we have a high support at the previous low here, and the shaking move that I've been doing. So the market may actually do what this market may do now is, if you want to take this trade now, you have to draw a Fibonacci from here to the swing high. So this market will retrace back to the 50 region before pumping back up. So let's do it practically. Draw a Fibonacci, swing high to swing low. You can see it here, to swing low. You see the market at 38, and it's already failing at 38, but this is where I'm hoping that the market, as you can see, there's a kind of restriction around here, so it's going to come back maybe somewhere here before it's finally want to break up, but it's going to give a respect of other block. So if the market fails here, we are going to be going higher highs and higher lows. So I'll also be taking the trade all the way to the upside. So my next level target will be, if the market breaks here, I'll be waiting for the market to come back, test as support before going back up. My next take profit will be somewhere around here. So if this video is kind of helpful to you, please hit that subscribe button. If you want a one-on-one mentorship with me about other block, market structure, retail and institutional trading, please, I'll drop my number in the comment section, not in the comment section, sorry, in the description box, not the comment section, in the description box, for $20. It's now $20, and I'm going to teach you every concept you need to know about retail trading and institutional trading, and how to combine the both of them together to get a profitable trade and never to be stopped out on a trade. Yeah, because I'll teach you the levels and what you need to know once the market is doing a shaking movement, and what you have to take in place. Yeah, so I'm going to be teaching you both sides. So I'll be launching a website very soon. Where I'm going to just settle down and put the course together from start to the very finish of it, from being a scratch a beginner to where you'll be intermediate and taking professional trades. So I'm going to be putting them in that website. So once you go live, you just watch it and all of that. So not be putting my number here and start going afresh for each new student. So you just go there and watch and come back to ask me questions. So once that is live, I'm going to come here and I'm going to tell you about it. So just anticipate for that. It's going to be coming soon. So that's that about that. So I'm going to close the curtain here. So if you want the one-on-one mentorship, my number will be there. Please comment Forex in the comment section below to help this video go and reach more people. Thank you for watching. Thank you for staying by. Thank you for giving me your time. It's really valuable to me. And take care of yourself. Stay safe wherever you are. Peace.